A very good afternoon, everyone. Welcome to today's session. We'll start in a few minutes at 4 p.m. A very good afternoon, everyone. Welcome to today's session. Thank you for joining us. This session is on our Axis Intellect Balanced and Aggressive Baskets, product that we are very proud of. And today we have a very special guest with us to take you through the session. We have with us Mr. Neeraj Chadavar. He is a head of research, fundamental and quant, and he'll take you through the session and tell you about our products of Axis Intellect Balanced and Aggressive Baskets. Over to you, Neeraj sir.
Yeah, thank you, Adit, and thank you to all the participants for joining our special webinar on Axis Intellect Score-Based Top Ideas. So let me quickly check, is my screen visible to everyone? Aditya, could you please confirm?
Yes, we are able to see your screen and you are audible.
Thank you so much. So let's get begin. So this is our standard disclaimer for all our products. So without wasting time, I will take you through the journey of Axis Intellect, aggressive AI and the balanced AI. So this is a new dimension of investing using score-based top ideas. Now, before begin, let me put you some story for you. Then it will be easy for everyone for us to understand this product in a better manner. Till now, we are aware about two traditional methods of investing. One is the technical analysis and the second is the fundamental analysis. So let's deep dive into both the process once again. so that it will be easy for us to understand how Axis Intellect is completely different and how it is positioned and taking the insights from both the world of investing. So, what is technical analysis? So, technical analysis is a deep dive study on charts, patterns, in which we try to identify some of the patterns in which we find comfortable about the trend, about the volume trend, about the price trend, and based on that we come up with a script saying that this is a stock which we want to buy with some target price in mind and with some stop loss in my mind. So this is a traditional approach of technical investing. Let's deep dive into another way of investing, that is fundamental research. Fundamental research is more advanced, one step above. In fundamental research, we do the deep study about the company, deep understanding about the financial statements of the company, that is profit and loss, balance sheet, and the cash flow statement. In this study, we do some business projections. We do top-down approach starting from economy to the sector, to the industry, to the stock, or the bottom-up analysis. On top of that, we do the deep dive financial modeling, that is nothing but known as fair value analysis, which is traditionally known as the that is traditionally known as the fair value analysis or the valuation of the company. Based on the fair value analysis, we come up with our target price, a 12-month target price, and our view, that is buy, hold, or sell. Now comes the third dimension of investing, that is Axis Intellect. It's a score-based investing. In score-based investing, we don't come up with any target price in my mind. Rather, we work on winners. We try to identify the winners of the market, and based on winner, we select our top ideas. So what is these winners? How to select those winners? How to select those top ideas? Let's deep dive into that. The first approach, that is Axis Intellect Aggressive AI. We built these two approach with two fundamental concepts in my mind. The first fundamental concept is long-term wealth creation, and the second is risk management. Both the strategies are built on these two fundamental principles. So what is my aggressive AI? Aggressive AI is nothing but it's a dynamic multi-factor strategy approach which adjusts the investment style based on the evolving market condition, which enable all of us to earn higher gains in a longer run. This strategy applies unique approach to select or deliver alpha in a longer run by applying equal exposure to core and satellite factors. Now, these strategies are based on factor research. Factor research is nothing but key attributes of certain stocks. Key attributes are nothing but known as styles of the market. What are those styles? Value investing, growth investing, quality investing, momentum investing, low volatility investing, beta investing. All these styles are nothing but known as factor exposure. And what this Axis Intellect Aggressive AI do? Aggressive AI do the unique approach to deliver alpha by dividing the exposure equally among the core factor and the satellite factor. What are the core factors? That is low volatility, value, growth, quality, and momentum. And what are my satellite factors? These are the factors that have historically done well in my predictive regime modeling. I'm parking this word predictive regime modeling. I will discuss this. What is this predictive regime modeling in my subsequent slide. So all these strategies are thoroughly back tested. What are the result of thoroughly back tested? Superior risk adjusted return in a longer run. So what is this? Our unique process flow is all about. Our unique process flow starts with NSE 500 companies. NSE 500 stands for almost 94% of the Indian market cap. Now we do have an in-house screening mechanism to delete all the low quality and high volatility companies. As I was mentioning, these strategies are built on two principles, that is the long-term wealth creation and second is the risk management. These elimination is a part of my initial management of risk management. Elimination of low quality companies and high volatilities companies. At any given point of the time, we don't want any stock in my top ideas which stands for high volatility characteristics or a low quality. What do you mean by low quality? Companies which generally having a more cyclical earning. It is very difficult to forecast the earnings for the company. Loss making companies, some amount of low ROE companies, which we consider this as a low quality. We filter out those companies from our universe and we left with 240 companies. Then we apply our powerful ranking and grading system, which comes up with a ranking of all the stocks based on value score, growth score, quality, momentum, alpha, all styles of the market. Then comes our style selection framework, which is nothing but known as regime modeling. Again, I will discuss regime modeling in my subsequent slide. Based on regime modeling, we try to optimize our strategy and try to identify top 20 winners based on the current regime of the market. These strategies are quarterly reviewed or quarterly rebalanced strategy, and model decide the quantitative method for the weight management. We thoroughly backtested those strategies and we identified that if we rebalance these strategies 4 times in a year, and these 4 times are strategically chosen during the first week of February, first week of May, first week of August, and the first week of November. All those dates are strategically chosen based on the thorough backtesting, and these dates are fall exactly at the middle of the earning season. And what we found that when we rebalance our top ideas exactly at the middle of the earning season, we tend to get higher alpha in a longer run. So let's once again, what is our approach? We remove low quality, we remove high volatility, we left with 240 companies. In 240 companies, we apply Axis Intellect, which is our proprietary score mechanism, to all the factors which is available in the market. Based on that, now comes the crux is India regime forecast. Now, before deep dive into India regime forecast, let me put you two examples. With this example, it will be very easy for us to understand why India regime forecast is important for us. Let me put your perspective of IPL match. Everyone is aware about the IPL match. Let's say there is an IPL match between Mumbai and Chennai. The match is playing into the Wankhede Stadium. Now, before selecting the playing 11 from both the team, which are the different parameters one need to consider before selecting best playing 11 for the match? What are the probable conditions one need to check? The first condition could be whether it is a day match or it is a day-night match. Second could be what are the player statistics in an opponent team, whether we are playing in a home ground, whether we are playing in a other ground. Which are the top batsmen in my opponent team? Which are the top bowler in my opponent team? What are the pitch conditions? Pitch condition could be in the favor of batsman. Pitch condition could be in the favor of bowler. If pitch condition is in the favor of batsman, definitely we come up with the best opening batsman in my playing 11, and there could be a probability to add all-rounder in my playing 11 also. But if the pitch condition is in the favor of bowler, definitely we play with top 5 bowlers squad in playing 11. Why we are applying all those strategies? We are applying those strategies only to make our winning chances in the game of IPL match. The similar strategy applicable in stock market. In stock market, if we want to run a strategy of factor base, or to find out the winners of the market, to identify the winners of the market, one need to identify the playing condition of the market. So what are the current state of the market, which is equivalent to the playing condition of the IPL match? So how to identify the current playing condition of the market? Based on volatility regime. We forecast the volatility of the market in two states, whether the near time, excuse me, in next one quarter, what we are expecting, whether we are expecting a calm state or a chaos state. Calm state for a less volatility regime, chaos state for a highly volatile regime, which comes under volatility regime. We divide the market and break the market into two phases. On top of that, we try to break the market into macroeconomic regime. What is the current regime of macroeconomy in the India level? For that, we refine multiple parameters like GDP, CPI, IIP, FDI, money supply, interest rate, bond yield, exchange rate, unemployment rate, and we club all those parameters and try to identify the macroeconomic regime of the market. When we club nifty volatility regime with the macroeconomic regime, that comes my India market regime. Now, this comes my playing condition for the market. Now comes the next beautiful part, that is the style selection framework. Now we know that these are the playing condition of the market based on the India market regime. Now we need to identify that in these playing condition, which style tends to do well. So what we do, we go back in the history and identify that how many times we got these types of combination. And if we had invested 100 rupees in that type of combination of point of time, which style had given the highest return going forward? That style will become my satellite factor or the forecasted factor, and we apply 50% weightage to this satellite factor. Let me refine once again the style selection framework. Based on the India market regime forecast, India market regime is my current playing condition. Based on the current setup, we go back in the history of Indian market and try to identify that how many times these types of pitch condition happen in the Indian equity market. If someone would have invested 100 rupees in those pitch conditions, which style has given the highest return in the later point of time? So based on that, that will become my satellite factor. 50% weightage goes to satellite and remaining 50% goes to core. We combine those results, and based on that, we rank all the stocks and try to identify top 20 investment ideas based on our optimal strategy. And based on these combination, what we got, including our back testing and including our live result since February 2014, 5 lakh rupees invested, including our back testing plus live result, it had become 23.7x return. And what about the money invested in the index? That would have become 5.8x. These strategies are in live market since April 2022. So 2-year return is a live return for these strategies. So what is the CAGR return since February 14? CAGR return is 34.8. What is the excess alpha we are making? 16.9% over and above the index. What is the standard deviation? Standard deviation is 18%, a little higher than the NSE 500 because as the name stands, aggressive in nature. So this strategy tried to find out bets more from the broader market. If we tend to identify bets more from the broader market, definitely our standard deviation will be little bit higher, but it is converted into a very solid sharp ratio of 1.5. The drawdown for this strategy is 33.3%, which is even lower than the NSE 500. 1 month return is 2.1, 1 year return is 77.7, 2 year CAGR is 42.6. This 2 year CAGR is a live market return. If someone would have invested 5 lakh rupees 2 year back, that would have become 10.16 lakh. The similar amount invested in the index in Nifty 500, that would have become 7.88 lakh rupees. What about our top ideas for the current market? So top ideas as of 1st of August, these are our top ideas. You could see the pie chart. The breakup is between large cap, mid cap and small cap. 44% of the stocks are under the large cap category and 26 to 30% are into mid cap and small cap category. 6 months back, the majority of the ideas or 60 to 70% of the ideas were coming from broader market. But as the market has changed the texture, now more and more ideas are coming from large cap. So right now 44% of ideas coming from the large cap universe, a well diversified basket, well diversified among large, mid and small cap, and well diversified among the sectors starting from utility to building material. So these are our top ideas for the current market environment. The rebalancing frequency is quarterly in nature. Every quarter we review the model. Based on the review, we tend to rebalance the loser out of the top ideas, and we add the fresh winners in the market. So that's about my aggressive AI strategy. Now come down to the second strategy, that is the balanced AI. Now the name stands for balance in nature. So this strategy is little bit balanced approach. In the earlier strategy, aggressive AI, we apply the principle of core and satellite. Now the balance strategy, as the name suggests, we want balance in nature. So we apply only on core factors. So only core factors applicable over here, that is value, growth, quality and momentum. We apply the average score for all the core factor, and based on that we try to identify top 20 ideas for the evolving market condition. This is a thoroughly back-tested strategy. What we received, superior risk adjusted return in a longer run, and based on the proper risk management, the drawdown for these strategies are lower as compared to the market. So let's deep dive into what is our unique process flow. So our unique process flow starts with top 5,000 companies, top 500 companies, that is NSE 500, which again stands for 94% of the universe. Then we have an in-house screening process. Over here, we tends to remove top 100 high beta companies from the top 500 universe. We don't want any high beta companies in our universe for the balanced approach. This is our risk management. Now for the remaining 400 companies, we apply the powerful ranking and grading system. Then our optimal strategy, that is the balanced multi-factor strategy, will provide equal exposure to the core factors, that is value, growth, quality and momentum. Why we are applying the equal exposure? Because we want balanced top ideas in nature, which will have a flavor of value investing, growth investing, quality investing and the momentum investing. So it means that it's a all season type of top ideas, and based on that we try to identify the top 20 investment suggestion, and our model will apply the quantitative ranking. This is our second level of risk management in our balanced AI approach. And based on that, what we received 2 lakh rupees invested in February 10, that would have become 30x by August 2024. The similar amount invested in NSE 500, that would have become 6.8x. In terms of statistics, these statistics are based on our backtesting plus our live market result. This is the same strategy which is in a live market since April 2022. So the 2-year return is a live market return. CAGR since February 10 is 26.4. The excess alpha is 12.4. The standard deviation is 15, which is very, very below the NSE 500 standard deviation. As I was mentioning, this is a balanced approach. So the risk in owning the balanced top ideas is even lower than the index investing. And even with the lower standard deviation, we are able to achieve a higher Sharpe ratio, that is 1.3. The beta is very low, 0.7. The drawdown is 32.4%. In last 1 year, this strategy has given 70% return, and the 2-year CAGR is almost 39.2% return. If 2 lakh rupees invested 2 year back, that would have become 3.87 lakh rupees. The same amount invested in the Nifty 50, Nifty 500, that would have become 3.1 lakh rupees. How we able to achieve this lower risk in NSE as compared to NSE 500? The beauty lies in the next slide. This is our current top ideas, the balanced AI. These are stock ideas as on 1st of August 2024. A well-balanced stock ideas starting from healthcare to building material. But if you see the pie chart, 58% of the top ideas are coming from the large cap universe. 34 plus 7, 41 to 42% are coming from the remaining broader market. More and more ideas are coming from the large cap universe, and we know that for large cap, the standard deviation is lower as compared to the broader market. And based on this unique positioning, we are able to achieve a solid return since inception of April 2022. So this is our balanced approach. So we have a two proposition. Both the strategies are built for long only equity top ideas. The ideal investment horizon will be 3 to 4 year. What we have seen that if we hold for at least 3 to 4 year, we will reap the benefit of all those strategies. Aggressive AI try to identify ideas from the broader market. So some new ideas coming from more broader market like mid cap and small cap. Balanced AI apply the balanced approach where the majority of the ideas are coming from the large cap universe. Both the strategies has outperformed in last 1 year and 2 year scale. The minimum investment required for these strategy is 2 lakh rupees, and the platform charges are 4999 plus GST, and these 4999 plus GST platform charges are yearly subscription, and the minimum investment required is 2 lakh rupees. So with this, I am ending my presentation, and I am handing over the call to the Aditya, and he will take you through the further updates. So happy investing.
Thank you so much, Neeraj sir, for taking us through our Axis Intellect product. If and those who are watching us live on YouTube, if you have any questions, please put that in the chat box. We are here for a few minutes, and we'll be very happy to answer them all. So there is a question, brokerage, do we need to pay the brokerage charges? Yes, you need to pay the brokerage charges according to your brokerage plan. And there is one more question, if the charges are applicable for Access Direct customers. Yes, this is an offering for Access Direct customers, which comes with a subscription fee of 4,999 plus GST, and the minimum investment value is 2 lakh rupees. So there is a question after the purchase of this basket whether we can sell or buy ourselves or it is controlled by Access. So Hitesh, would you
So
like to take
ideally, these stocks that you buy or either subscribe to are in your primary trading account. So they are always visible and their performance is always visible in your primary trading account. So you can sell and trade those stocks from your primary trading account. But then these stocks, if traded from your primary account, will again demand for an additional money when you do your rebalance.
So I guess that answers your question, Ganesh. So that's it, everyone. Thank you so much for your time. We are closing this session. I hope you got clarity on our Axis Intellect Balanced and Aggressive Basket. Thank you so much, Neeraj sir, for taking us through the session this afternoon. Hope you have, hope everyone have a great evening ahead and a great weekend. Thank you.
Yeah, thank you everyone, and have a happy weekend.